It's been a busy week of earnings news. It's that time of year, but all of the Detroit Three, amongst and as well as some other companies, announced their uh, second quarter earnings for the Western companies, first fiscal quarter for some of the Asian companies. But of course, you were focused on Ford this week, and among the among the big automakers, right? We saw Tesla and Stellantis profits way down. GM was up. Ford was down a little. I mean, it was pretty flat compared to everybody else. Everybody's stock got sold off. It was it seems like Wall Street is just sick of the auto industry and doesn't want to hear it anymore. Ford was a classic example.
Yeah, sick the auto industry for a number of different reasons, and Ford kind of bore the brunt of that investor discontent. Their stock was down 18% the day after they announced. And to put that in perspective, that's the single worst day since 2008. So, not
Oh
great
my.
times to remember back on if you're an automaker. I think Wall Street was mostly upset with the fact that Ford's stock was down because of warranty issues, which is something
Mhm.
we've heard time and time again, getting back to those quality woes that they just can't seem to shake. The CFO, John Lawler, said they spent 800 million more dollars than they did in the first quarter, and that it was unexpected. It was a mix of a number of different field service actions. He cited some failed oil pumps on some 2016 models, some failed rear axle bolts on some 2021 models. So older vehicles, sure, but still not a good look for a company that just can't seem to get anything right when it comes to quality.
Well, that was the thing is these are older models. They predated Farley becoming CEO for the most part. They really, I mean, those were the quality problems. Partly why he was promoted, why it wasn't Joe Hendricks, and so it's a little odd, but it's not like the new launches have gone super smoothly. We saw delays with the F series. That's so important.
It seems like every quarter we're talking about something quality related. If not older models, last quarter it was the F-150 holds that they were supposed to have gone out to customers and dealers, but they were sitting in holding lots around the Metro Detroit region because something was wrong. Ford never said exactly what. Before that, the Super Duty launch, Ford
Mhm.
was holding those vehicles longer. So there's a lot going wrong there. They say they're on the right track, and one metric they're pointing to is initial quality. The various surveys and their own internal metrics are pointing to improvements there, and they say there's obviously a bit of a lag time between better initial quality and everything else that shows up down the road. So they're trying to tell Wall Street everything's fine, it's getting better, but they're not happy that they just can't seem to get a clean quarter.
Well, yeah, and it is a good sign that initial quality is improving, and sometimes you have to do the extra quality controls, the extra fixes to make sure that your customers have a good experience. And certainly you don't want to have to do massive recalls on something as big as F-150 or F-250. But to the same point that, Mr. Tavares at Stellantis was making about his company and its, profits, which are still the biggest among the Detroit Three, if we consider them Detroit. Anyway, they made $6 billion. GM and Ford made $4.5 billion. But he's like, this is not good enough because we keep having to rework vehicles at the end of the line. And when you do that, you're just not an efficient manufacturer. And that is the job of the automakers. They are to make the autos.
And, to Ford's credit, they have really tried to tackle this in making Kumar Galhotra the COO. I believe about a year ago now, they gave him sort of complete control over the manufacturing process. A lot of different folks report to him. So they say that new setup has helped things, and this new strategy they have of holding vehicles longer so they don't have to issue recalls, while it may hurt the bottom line, it's going to help them with customer satisfaction down the road. So, it remains to be seen how that'll work out, but they think it's the right path.
Then beyond that, like it's sort of the same old story. I mean, of course, we have the quality issues, and that was what really hurt the stock. But we continue to see, losses at Model E and profits from Ford Pro. Let's tease those a little apart. Was there anything new developing with Model E, or is it just sort of continuing to sell those initial vehicles while they work on a lower cost, maybe shorter range, but certainly lower priced EV?
They've essentially all but given up on the idea of making money on these first generation EVs. Everything's looking towards the next generation. They lost a little over $1 billion on the Model E unit this quarter. They expect to lose at least $5 billion this year. A bit of a microcosm. They're making money hand over fist on Ford Pro, really high 15% margins too. Bit of a microcosm of that strategy played out a week or so ago when Ford announced they were moving some three-row EV crossovers from their Oakville plant in Canada to a yet to be determined location. And instead, they're going to build more Super Duties at that plant. They wanted to turn it into an EV plant. Now they're saying, you know what? The demand for Super Duty, especially on the commercial side, is so high. We need more capacity than we have even at two plants in the United States. So they're adding a third Super Duty plant and, dealing with these three-row EV crossovers later. So, I'm not sure if these EV three rows have been bounced around a lot. They've been pushed back a lot. Again, it just seems to be that Ford's realizing it's going to be a lot harder to make money on these types of products.
Well, that's again, it goes back to some of the how the stock market's so confounding because look, a decision like that, and I think you almost have to say, I mean, the three-row EV is sort of in hiatus. I mean, it's not, probably not officially in hiatus. I'm sure they're working on it, but it doesn't have a launch date. It doesn't have a launch plant. So you're pausing or if not killing a big money loser, adding production of a big money maker, and they still can't get any love for it. Bad for the
Yeah,
environment, good for shareholders. It seems like they should be happy, be cheering them.
exactly. And we've talked about this plenty of times. Sometimes Wall Street doesn't exactly make a lot of sense. A couple of years ago, maybe 2021, 2022, the way to impress Wall Street was to say you were going all in on EVs. You have these plans for these various plants and different kinds of models. That's not the case in 2024 going into 2025 right now. And even with Ford trying to say that, hey, our specialty, high profit, in demand commercial vehicles, nobody else can do what we do. That arguable, but they seem to think they stand head and shoulders above the rest of the industry on commercial. That even that's not giving them a whole lot of love. Although to be fair, in some of the investor notes after earnings, some of the analysts did point to strong underlying parts of the business, including commercial, as the reason why they weren't necessarily going to downgrade Ford, even though the stock tanked.
I mean, looking at your story, it is kind of mind blowing that a unit, it's frankly not that big, Ford Pro, is expected to deliver, 9 to $10 billion in pre-tax earnings.
And, a point Jim Farley and the rest of the executive team like to make is that that's not all just vehicles, that the Ford Pro unit is really leading the charge on high profit, high margin subscription services that we've talked about at length, throughout the industry. Everybody wants to move to that kind of model. They say it's less cyclical. They don't have to worry about the ebbs and flows of the traditional industry buying habits. That, if they offer customers high value uh, items, whether it's security or telematics based, they'll purchase them on a monthly basis or yearly basis. Ford's seeing that. They say within a couple of years, 20% of profits will come from parts, service, and subscriptions. Uh, and they said in this quarter as well, those subscriptions numbers went up substantially. So not just the products, it's more than that.
Yeah, it's funny. So it kind of breaks down, right? The Ford Blue, the regular gas burning business, excluding Ford Pro, makes about as much as Model E loses, maybe a little extra. And the rest of the business is Ford Pro and Ford Credit, which is continuing to make pretty steady profits, right?
Exactly. You could make an argument that Ford's still in a pretty good place. Revenue was up this quarter. They have their projection for adjusted EBIT for the full year is between 10 and 12 billion dollars. If they hit the high end of that range, if they hit 12 billion, that I believe would be a record for the company. So they're not in a horrible position. It's just that some of these uh, manufacturing challenges they've had for a while are still dragging them down.
Well, we know you're going to keep an eye on it. It's been a wild ride for Ford, and it's not going to stop. But interesting times, Michael. Thank you so much for your coverage. Thanks for joining us on Weekend Drive.
Thanks for having me.